Good morning, everyone. My name is Jake Zarnegar. I am the chair of the governing board of CACF, and I also have a donor advised fund at the foundation, so I'm as keenly interested as you all as to what the program is and what we'll talk about here today. But before we get started, I thought, let me tell you about my weekend. And that's a little out of left field, probably not what you expected to hear. On Friday, I saw the very end of the Tiny Trifecta program at the 2nd Street Gallery, where local artists, students, and showed their artwork, some of them in their first ever art show. As I walked towards Ix, I walked by the redevelopment of Kindlewood and saw the new townhouses and apartments coming up in that space, some built and some still under construction. I walked by the PVCC Adult Learning Center and saw recent arrivals for our community coming out of an ESL class. I went into the Charlottesville Ballet to the chaos, which is early Nutcracker rehearsals. The next morning I got up and I ran around the Ravenna Trail and the Loop de Ville put on by the Ravenna Trail Foundation and saw all of the green spaces looping our area. And fast forward just last night, Leslie and I went out to Morven to the kind of graduation cook of a jobs cooking program called Go Cook in this town, where kind of budding culinary entrepreneurs have learned skills in the kitchen. And what really struck me was that everywhere I turned over the last few days, I saw investments that had been made in our community kind of bearing fruit for the people who call this region home. So, you know, investments in the arts, in housing, in education, in the environment, and in job training. And this group is obviously a key portion of these investments that are being made. These investments are being made by donors, they're being made by the time and energy of the nonprofits in the region, they're being made by the local government support as well. And at CACF, we have been kind of proud and trusted stewards and facilitators of this regional philanthropy and your investments in the community for about 50 years now, maybe more than 50 years? More than 50 years now. But as comforting as it is to kind of look backwards, and even it's nice to look back at my weekend, which was really nice, we really have to resist looking backwards, and we have to turn and face forwards and look at the future. And this is a time that is a time of transformation at CACF and in our community. But it is also a time of great opportunity where we can expand and improve our offerings here at CACF, but also for what we can do in the community. At CACF, this transformation is very tangible. We have a dynamic new CEO in Lynn Smith, who you will hear from. We have a new, highly capable and collaborative investment partners at FEG who will also talk today. And we have new programs that have been kicked off inside of CACF with new funding for local impact investing to make larger investments into the community in partnership with many of you all. So transformation can be exciting, but can also be a little scary, and it doesn't always go as smoothly as it can. So we wanted to make sure, and we wanted to have everyone gather here today and frequently to make sure that we bring both transparency and can earn your trust during these transformational processes. We figure the best way for us to earn your trust is to show you everything that we're doing, why we're doing it, and be in conversation with you about those and hear your feedback about how you would like us to serve you and the community and respond to that. So today you'll hear directly from our investments team and our CEO about these opportunities and challenges that lay ahead. I encourage you to ask questions today, if not during the program, if you can. If you're bold and like to ask questions during the program, please do. If not, we'll be here. Please find us after the program, or we'd be happy to follow up with any and all of you after today. So it is my pleasure to introduce you all to the new CEO and president of CACF, Leslie Smith. Thank you.
do better than that. Good morning, y'all. Yes, it's so early. It's such a fabulous time to be with all of you. Jake, thank you for that warm introduction, and thank all of you for being here in this beautiful space. I'd like to thank the Wool Factory, who have been amazing partners in pulling together this beautiful event to host all of you and get to learn a little bit about what we're doing in this transformational time, which is not without its challenges and opportunities. And I think they've created just a beautiful space for us to sort of share this moment with together. I want to thank the team at CACF and ask all of them to stand up, please. Some of them are already standing because they're working very hard. Stand up, y'all. Stand up, stand up, stand up. Yes. This beautiful group of humans have welcomed me here with open arms, have shared with me transparently and vulnerably, and have committed to take this really amazing adventure with us. And I'm deeply grateful for their efforts, not only in bringing together today, but so many of the things that we're going to talk to you about today as well. I want to also acknowledge, for those of you that are looking for her, our beloved Ebony Bug is home with an actual bug today, which is preventing her participation. And so I will not only be presenting my portion of the agenda, but I will be presenting hers. And I will do so as best as I am able, but please forgive me if I fall short of what she would have done if she were able to be here. I also want to thank our board and committee members. Many of you are here. You work tirelessly to support our efforts. You speak candidly about what we need to be doing better or more effectively. You've leaned in and listened to all of the feedback that I've shared as I've come to understand the opportunity space that we're facing, and I'm just deeply grateful for the welcome. And then finally, the community of Charlottesville. I'm not from here. I moved here from Chicago, spent time in Memphis, and I'm originally from Detroit, Michigan. And the generosity and fellowship with which you have greeted my husband and I has been nothing short of remarkable. So I just really sincerely thank you for adopting this Detroiter into your community and giving me the opportunity to earn your trust and respect and partnership as we move forward in the community. Quick little summary about my family, because you can't know me if you don't know them. My husband is a first grade school teacher who has happily settled in at Baker Butler and is teaching Charlottesville first graders and is having a beautiful time. And we have 3 lovely children who are the opposite of children at this point. We have a 32-year-old daughter in Memphis, Tennessee. She's an artist, creative singer, songwriter, playwright. She does amazing, miraculous things in the world with her husband. Our son is in Nashville, Tennessee at Vanderbilt. I know some of you went to Vanderbilt, specifically you, Jay, because that's a moment we shared when we first met. He's an assistant basketball coach for the women's team there and is having a marvelous time in Nashville, Tennessee. And our youngest is an acting student in Vancouver, BC, and will be returning to Charlottesville after her program ends to think about her next steps. So she will join us in community here soon. So on behalf of those humans and myself, thank you. This morning has been in planning since I think the second day I arrived, and it's really been built in response to feedback that we've received through surveys and conversations that we have an opportunity to improve not only the depth of our relationships with all of you and our connections, but the transparency with which we report about the things we're doing, clarity around the decisions we're making, and a sort of deeper and wider engagement about what's possible here. And so today is really the first step in what I hope are many steps that we will take together on this journey. And as Jake said, I'm really leaning toward the future and what is possible together, though I did have to do a pretty robust evaluation of what happened before I got here to understand what that could look like. And candidly, that has meant some pretty difficult conversations about areas where we've missed on basic blocking and tackling, concerns about performance, questions about fees. And I receive all of that information with an open mind and open heart, just committed to sort of solving in that space so that the conversations that we have are more strategic and joyful and forward thinking. So please know that we are earning with intention our way back into relationships that feel balanced and mutual and affirming. We're also, as Jake said, making some really intentional and strategic investments and thinking in the ways that we can show up in a more significant way in the community in partnership with all of you. A couple of my early observations are that we have, I think, a potential to step more boldly into the arena with all of you and use our objective convening power, our experiences, our resources, and our energy to join you in the arena rather than sort of stand on the outside and look in, hoping for the best. And I know in many ways, Ebony's portfolio around impact and discretionary grant making and some of the competitive grant making work we're doing is keeping us in the game. I know there are a variety of other ways that we can get in the arena with you, and that includes solving for some of the most pervasive challenges we have as a community relative to access to housing and homelessness and affordability and food security and climate change and all of the things that we know are challenging us currently. We want to be in that work with you, thought partners, solving those big problems together. So look to us in that way and know that we need all of you, not just for your generosity and financial resources, which are really critical to the work that we're all trying to do, but for your intellect, for your lived experiences, for your proximity to the very problems we're trying to solve, for your challenging inquiry around the things that we're thinking and the ways that we can do this better, for your honest feedback when we get it wrong and allowing us the opportunity to fix it, and hopefully, ever increasingly, for your enthusiasm about the things we're doing together. So we look forward to all of that. We're also really going to be focused on strategic growth, which is not an area of work that the foundation has focused on in past years. We've really been in a sort of holding course perspective, and that is particularly in times when we're seeing a reduction in resource access from the federal government and state governments, even more critical for us to organize and sort of bring catalytic resources to bear in our communities. And so we're gonna get really a lot more intentional about that. And many of you know Terrell White, who has been leading our advancement team for a number of years, is stepping into a full-time strategic growth role with me to really bring more resources to bear for the community. And so you'll start to hear and see Terrell in a slightly different way, and I hope you'll be supportive of our ambition around really growing the sort of portfolio of resources that we can collectively bring to the challenges that exist across the community. We've also recently been thinking about advancement as sort of a singular orientation to philanthropy and expanding our aperture a little bit to think more about philanthropic engagement. So what does it mean to be in deep relationship with all of you, to deeply understand what the data are telling us and what your priorities are telling us, and bring those together to really find a path to have exponential and leveraged impact in the region. And so with that renaming, we'll be sort of expanding our team and aligning leadership that will create a space for us to get into deeper and more catalytic relationship with all of you. We have 4 pillars of sort of commitment at the foundation. Strong enterprise. We're going to really work around getting our financial department stabilized and functioning at a best-in-class sort of orientation. We're going to do the same across all of our program areas. We also care a lot about these catalytic resources, so we're not going to sort of passively participate in the conversation. We're going to work to be catalytic with your sort of influence. Deep and authentic relationships. The data on our surveys say that we're doing okay on that, and I want us to do much better than okay. So please look for us to be sort of deeply seeking your engagement and a depth of relationship that we think is going to be really important in the years to come. And then influential leadership. We want to be bringing sort of best-in-class modeling for philanthropy nationally and have Charlottesville be a place where folks are looking when they're wondering how can we tackle some of these most pervasive problems. So think of us as sort of expanding into those pillars in a very real and intentional way. And if there are areas where you think we can do better at any of that, I am open to hear all of that. I want you to think of me as fully and completely accessible. My business cards are on the front table, so I mean that deeply. You can reach out to me and we will find time to talk. We're also sort of lastly going to be focusing in new ways on innovation, thinking about ways we can bring new ideas, products, offerings to bear in the community in ways that respond to your needs in real time. A really good example of that is a reimagining of our agency fund portfolio and sort of hearing some of the questions and concerns that have been voiced over the past several years that have really resulted in a shrinking of that portfolio in some ways that creates an opportunity for innovation and reimagining. And so we're not afraid to talk about the things we've gotten wrong because if we don't do that, we can't really address them and move forward. So look for more innovation coming out of CACF. And it is my deep hope that you will see yourselves in all of that innovation because it will have been informed by the community voice that we have gathered here today. So thank you. Thank you for joining us. Thank you for being here as I start my journey in Charlottesville and attempt to take real and bold action. We won't always get it right. Innovation necessarily invites the opportunity for getting parts of it wrong. But we will own our mistakes, we will apologize as necessary, and we will continue to move forward. So I invite you to join us all on that journey, and thank you for being here. Okay, now I'm Ebony. She's far more serious than I am, and very thoughtful, and is showing up for me in ways that are making me better at this job every single day. So I will do my very best to honor her and the work that she's done over the last several years, in particular, the work that she did in partnership with our investment committee and the board of directors to run an RFP process to find a new OCIO to represent the Charlottesville Area Community Foundation and all of your interests. The process was arduous, it was deeply detailed, it was thoughtful, it was long, it was sweeping in its perspective, and ultimately yielded a decision that was unified, unanimous, and joyfully celebrated by not only our investment committee, but our board and our team. And so we're really excited to create the space and opportunity for you to meet the team at FEG, who have deep and wide experience in the nonprofit space, but more particularly in the community foundation space and with many community foundations that are of a similar size and scale to the Charlottesville Area Community Foundation. And that is clearly what brought them into sort of the game. Their performance is what kept them in the game, and their collaborative energy and problem-solving spirit is what gets me excited every day when I wake up and think about this relationship. At our board meeting last week, we adopted our investment policy statement, which was collaboratively developed with FEG, our investment committee, and our board of directors, and I think really orients us towards some of the things we've been hearing from all of you, better positioning in market with accelerated growth, and more sort of clarity and transparency in reporting. I had a very long conversation with Sarah, who you'll hear from shortly in our office, about all of the ways we can make our reporting more consistent and more clear. And I think you're going to be really excited about the ways that FEG has responded to support that effort. They've also really helped us imagine some additional opportunities in the portfolio, particularly around socially responsible investment opportunities, which will be available, and an intermediate sort of investment pool. So in the coming months, you'll be hearing more about those innovations in the way we invest your assets in partnership with FEG, and we're so excited about that. We're also really excited about the core values and ethos of this firm, which are employee-owned, Midwestern-based, and really, I think, aligned with the values of the foundation in a very seamless and beautiful way. And I'm really, really, really looking forward to the things that we can do together and the ways that we will not only grow your assets, but be able to deploy them in more catalytic and strategic ways. They're coming to us this morning, or actually yesterday. I think they're meeting with some of you in one-on-ones as requested from Cincinnati, and they've brought an entire team of folks here to talk you through their strategy, their organization, their history, and their commitments to each of you. And so on behalf of our entire team, and in particular Ebony, who has led this effort for us so fearlessly, I would like to welcome FEG up to the podium. Thank you.
Hi, good morning. Good morning. Thank you all for coming here. Thank you, Leslie. That was an incredibly warm introduction. I'm Catherine Maurer. I am honored to be the lead advisor for this relationship. So since we've started working with you all in February, Sarah and I and other team members have been up here more than half a dozen times and really had a chance to engage with you all, engage with your community. And it really is an edgy and vibrant and special place. So much so that I've already told my 15-year-old daughter about it, and I'm excited to bring her on one of our upcoming trips to look at the university. So it's great. And we're really honored to be part of the mission. I don't think many of you all can see the screen, so I'll just read, but Charlottesville area to be a region in which everyone can belong, participate, contribute, and thrive. That is a really special mission, and it's a special place. And we, first and foremost, we're here to deliver investment returns. We're focused on the portfolio, but we're also focused on the people and the priorities. It is very important for us to understand how this all works together. And what we're trying to do is deliver a sustainable return, meaning we want to support your community today, we want to support it 10 years from now, 20 years from now. And so we're going to walk through a bit more on how we approach that. But I am saying we, you mentioned, Leslie, that we do have a team. So with us today, we have myself, so Catherine Maurer, again, lead advisor. I've been with the company for 19 years. I focus in nonprofits. I work with 16 nonprofit clients with assets from $30 million to $1.3 billion. And I also sit on the leadership team. Sarah will introduce herself in a little bit here, but she's been with the firm for about 10 years, is that right now? Okay, and focuses on donor engagement, the reporting, all those wonderful things you've been asking for. And then Alan.
Good morning. Thank you so much for having us. Jake, that was a fabulous walk through town. I haven't been here a half dozen times. This is my second time being at Charlottesville, and what a great way to remind me of why we're here and what we stand for and how we can support you. And Leslie, what a fantastic y'all. That from Detroit with a y'all like that. I grew up in Louisville, Kentucky. I consider myself a Southerner. I've been in Cincinnati now for 25 plus years, and we don't get to say y'all like that in Cincinnati very often, so I definitely appreciated that. But I am Alan Lenahan. I'm our CEO. I've been with FEG for 23 years, most of my career deep on the investment side, Chief Investment Officer, and now have the honor and joy of leading the organization. What does that mean my job is? It's pretty simple. I think my job is to make dreams come true. Not very simple, but when you hear about what FEG does, we partner nationally with nonprofits, and the part of our job that's the most difficult, making great investment decisions, is motivated by the great things our clients do for the world. It's fairly unique for a firm like us that manages money to be so heavily focused on nonprofits. And if you ask anybody at the organization what gets them excited about their job, they might start talking about markets and making decisions and where interest rates are going, but they're going to end with, and I get to do it for a great purpose. And thank you for the reminder and the opportunity to be reminded today about the purpose that we serve, and thank all of you for supporting this fantastic region and Charlottesville. It's a beautiful place, and you've done a tremendous job. So I'm going to tell you a little bit more about FEG. We've got some slides. We'll talk about how we invest so you can get an understanding of the expectations for what you'll see in the portfolio. And we'll talk a little bit about what's going on right now in the portfolio performance, how things are positioned, and how they're likely to get positioned in the future. And Sarah will give you an overview of how we're going to support you and make sure you have the transparency that you deserve as constituents in the Community Foundation. So maybe a little bit start, and by the way, from a constituent in this organization standpoint, every interaction I've had with the board, with the investment committee, you are in very good hands. The level of sophistication and understanding of what we do, of course you ran a great process because we got hired, but the level of talent involved in this organization exceeds just about every client that we work with. So I am confident that we will be held accountable by a team that really understands what's going on. So a little bit about FEG. If you can see this, that's a map. We are headquartered in Cincinnati, so Sarah, Catherine, and I are in from Cincinnati today. Midwestern roots, Indianapolis office. We also have an office in Dallas, Texas. National presence, $95 billion is, with the way the markets have gone, I might be able to say 100 here pretty soon, but 95 billion is still the stated number, and 89% institutional nonprofit. Even some of the clients that don't count in 89% are Native American tribes and other institutions that are serving a great purpose but don't count as a nonprofit. We're also 100% employee owned. When I say my job's to make dreams come true, it's first for you, for these communities that we serve. Second, for the great 140 employees of FEG. We're structured, I always hesitate to say this, don't get your phone out and look it up too much, but ESOP is the ownership structure we have. What that means for you is everybody you meet from FEG, everybody that engages with the Community Foundation is an owner of the firm. We don't have outside ownership. We don't have third parties. We don't have public company issues to deal with. We get to serve and focus solely on our clients, delivering results for them, and then everybody participates in the strength of the organization and the growth of the organization. And we also work with clients very similar in size to you. The stability also of being an ESOP. So we're here for the long run. If you end up with concentrated ownership or third-party ownership, there's buyouts, there's sales, there's things like that. We intentionally chose to be an employee-owned organization for the future so that we don't have to be bought out or be redirected or sometimes misdirected by some outside party, some outside owner. We're focused on you, we're focused on nonprofits, and we get to stay that way. I also learned early in my career, again, a benefit of being employee-owned, that conflicts can destroy relationships and lead to very bad decision-making. I started at Arthur Andersen in the mid-90s. Thank you for the laugh. That wasn't the joke, but it. But I learned, whether I knew it or not, in that time, what happened to a great organization like that was they allowed conflicts to creep in. They allowed themselves to make decisions that were not in their client's best interest, but were in the firm's best interest by having too many business lines, cross-selling, bringing tax and consulting to audit clients and then auditing their own work. Really bad ideas. We are committed to being as conflict-free as you can possibly be. You're going to transparently know what our fee is. It never changes. We don't change our fee based on how we invest. We're not putting product in that makes us any money. Our relationships with investment managers are always arm's length. Nobody pays us to get in a portfolio. We've eliminated every conflict we possibly can in the relationships we have with our clients. Hopefully, that does not mean we will always outperform. It does mean our effort will be focused on what's right for you and right for the community foundation, and only what's right for you. So let's talk a little bit about, we work, as I think Leslie stated, we work with 42 community foundations across the country. Catherine is tremendous in this space. She's a specialist, a leader. She developed our community foundation survey, which brings us a lot of knowledge in understanding you and your peers. Works with 7 community foundation organizations right now. And I'm so excited to be able to support her and Sarah on this engagement. You've got the absolute best we can offer in managing the relationship. So really excited about that, and she brings all of the knowledge of working with 42 community foundations to bear for Charlottesville. And there's a semi-long list of organizations we work for. We do work with Richmond down the road in the region, and really all over the country trying to support community foundations. So let me pass it back to Catherine and give you the overview of the investment approach.
Great, thanks. Yeah, so again, first and foremost, we are here to make sure your portfolio succeeds and delivers in the support of the community and the support of your mission. As Alan mentioned, that's not always easy to do, and we cannot guarantee performance, but we can guarantee a very thoughtful, rigorous, and diligent process. And that one, the way we do it, it can be different from different OCIO firms, is we really start by understanding our clients. Not every client is the same. Not every client has the same risk and return profiles, the comfort with alternatives, a lot of these things. And so we've already done a lot of that. We'll get to that in a minute, but we do make bespoke portfolios. Then another thing we do is we focus on the long term. We are long-term investors. Nonprofits typically have a perpetual time horizon, and that means you can invest in different ways, and you think about things a little bit differently. You think about risk a little bit differently. But then we're also mindful of the short term. There can be opportunities, periods of market dislocation to take advantage of, and we do try to do that. And then the last part of our process, search for alpha, manage beta, is a pretty investment tech way of saying we blend active and passive management. So we'll talk a little bit about that too. We did go through a discovery process. I think we have one of the most robust discovery processes in the industry, and I think a lot of the people, the board, the investment committee, staff who participated in this might agree with that. But we believe in taking the time on the front end to get the right plan and the right strategy. And so, when we first started working with you all in February, we stayed with your existing policy, and we were doing interviews, we had surveys, we had strategic planning sessions, and we went deep to really try to make sure that we were building a portfolio that was right for all of you and all the stakeholders in the community foundation. And as part of those goals, there's the return goals, and for you all, it was a 4.5% distribution rate. And plus, we have this 4% growth that does encompass everything. That encompasses administrative fees, it encompasses investment fees, it encompasses inflation, because we want to make sure that you have the same buying power today as you do 5, 10, 20 years into the future. And it encompasses growth. So ultimately, that gave us this target of 8.5% return. And that is our goal. That's what we're trying to achieve here. And just to give you a sense for how we thought about the strategy, this is one of the lenses in which we view that 8.5% target. It is a very busy chart, but I can explain it to you. So what this is are they're estimates, they're very good estimates, but they are estimates on what each different asset category that you can invest in will return over the next 7 to 10 years. So on that, the y-axis, you've got your expected returns. On the x-axis, you have risk as measured by standard deviation. It's one form of risk. We look at many, but this is one. And we're looking at this to say, okay, you have this 8.5% target. You've got that dotted orange line where the target is. You've got to invest, you've got to diversify. You're governed by MIFA, but you've got to invest in some asset categories that will achieve above that line. And so you'll hear what we think about private equity, private real estate, private debt, and how that's incorporated here in a minute. But we do have to incorporate some risk, and that's one area we can take risk. And then there's other areas we can take risk, which Alan will talk about in a little bit too, to get you above that, to increase your chances of getting above that dotted line. But we went through all of this and more, and many, many conversations to arrive at a strategy that was approved last week. As Leslie's mentioned, the board approved this last week, very collaborative. And the core tenets of the philosophy we built is it's equity leaning. History has shown that equities do deliver, they're a little more volatile, but they do deliver higher returns than most of the other asset categories. So 70% of your portfolio in the endowment is within equities. We do have 17% in fixed income. That is up from 14.5%. And by the way, 70 was up from about 66.5%, what you had before. So we increased the traditional core assets, equities and fixed income, kept your real assets, that can be real estate, that can be natural resources, infrastructure. We kept that at its about 5% level. And we reduced the diversifying strategies from a prior 14%, and we brought it down to 8%. So that is your macro asset allocation. But within it, because the endowment is designed to invest to perpetuity, some of those can be illiquid, some of those can be semi-liquid, and we did put some targets here because we are very mindful to make sure that you always have the liquidity you need to make the distributions. So, net all in 15% allocation target or max to private capital. And that's something we will keep on being very mindful of, just to, again, make sure you always have the liquidity you need.
So that's how we get to what we believe the right starting point is. And one thing to consider about that asset allocation is the right portfolio for anyone is the portfolio they can stick with. We need to, and Catherine did a tremendous job with the investment committee and board, defining that risk tolerance. How much risk can be accepted without changing your mind? Because that is how you lose money in markets, is changing your mind at precisely the wrong time, which is what generally happens. So we've got to get the allocation that we can stick with. We believe we have that. So that's the long-term focus. Focus on a portfolio and an allocation that gets us as close to achieving that goal as possible. We think we're there. But then things happen in markets, and it's our job to take advantage of some of those. The government shut down at midnight last night. This might sound flip, but don't worry about it. This has happened, it happened just about every year in the 70s and 80s. This is only the third time we've had a government shutdown this century, but in all the historical government shutdowns, the average life of the shutdown is 8 days, and markets in these last three that we've had this century, equity markets were positive during the shutdown and for the 3 months after the shutdown. There is a slight reduction in GDP depending on the length of the shutdown, but usually it bounces right back with reinvestment. So not to be flip about it, we didn't change the portfolio because the government shut down, and we're very confident that this will be worked out. It might be a little bit longer than 8 days. It looks like this could go on for a while, but I don't want to speculate because there could already be an announcement that they came to an agreement. But things like that are not what we consider adjusting the portfolio. These are, we also did not adjust the portfolio before we had the April meltdown due to tariffs. You cannot get in front of randomness. What you can do is measure markets relative to each other based on a framework that you're consistently applying. And for us, that's valuation, fundamentals, and sentiment. We measure all markets. For instance, when the market did go down 20% after tariff day, we rebalanced back into equities. We added to the equity allocation because nothing was fundamentally broken. What we had is a meltdown in what we consider sentiment or the emotion in the market. And when that happens, it's a great time to buy. So it's a good time to rebalance, get back to your targets after you are now below target. So those are types of opportunities that we are going to adjust portfolios to. And it's got to be a rigorous, consistent approach to making those decisions. And I'm not going to dive into the 35 different variables we look at under each valuation, fundamental, and sentiment category. And don't look too hard at these colors because it'll make your head spin. But you can see all the way on the right side, that's green. That's sentiment. That happens when markets are up. You've, even with the prior advisor, had a very good 3-year absolute result. Mid-teens returns for the long-term portfolio. I will tell you that is completely unsustainable. Our goal is to get 8.5 over the next decade. It'd be fantastic if markets just went to the moon. It will adjust. Things are expensive right now. We and you are fully invested. You're participating. Bull markets do not die of old age. They can extend much longer than anybody would expect, and valuations can keep climbing from here, and then you can actually grow with earnings into some of these valuations. So we like where we are right now in your portfolio. We do own small caps and a little overweight. The standard target to small caps as they are valuation. That's a valuation decision. They're more attractive than large cap. And you've also, since February when we implemented the portfolio, owned a nice allocation to gold within the real asset portfolio. So those are opportunistic positions that fit the valuation, fundamental, and sentiment analysis. And when I say things like overweight, we're talking single-digit percentages, a couple percent here and there. We don't whip portfolios around. We're not going risk off and eliminating all risk at any time. We're going to stick with that long-term allocation and adjust on the edges to try to add some excess return. So that's the short term. Let's talk a little bit about something I know everybody's sensitive to, and that's fees. There are no guarantees in the investment world except for the fee you pay for it. We're very cognizant of that. We've got your best interest in mind. We negotiate like crazy with underlying investment managers. We get fee negotiations, we get fee breaks. We bring those to you every chance possible. We also believe in a blend of active and passive. Of course, passive is the most inexpensive way to build your exposure, but there is excellence out there. There can be active managers that will outperform, and we're going to blend that in your portfolio. It's been a very difficult environment. Most active managers have underperformed across all asset classes for the last 5 to 10 years. A lot of that's due to this Mag 7, these mega cap tech names that have dominated markets. We try to get the right balance of active passive in the portfolio and only pay fees where we believe there's excellence in the ability for outperformance. And we'll see that as we continue to implement the portfolio. We've started with a portfolio that's primarily passive as we've gotten the investment policy statement approved, and now we'll start blending in the full portfolio. I'm not going to go. There are factors that make for successful active management. They're here. We've got a 30-person investment team focused on analyzing investment firms underneath this framework. What creates greatness? I'll leave this with you, or you with this. It's it's people, and you have to understand people if you're going to understand the ability to outperform, and that's where most of our investment team focus is understanding the people that are going to manage your money through us. Okay, few seconds on private capital. It is not a panacea. You've had exposure to some privates in the past. We believe in investing in the private capital market, mainly because of this circle here. 98% of companies in the United States that have revenue of 10 million plus are private. 98%. Only 2% are publicly traded. That's the reason you invest in private markets. It gives you access to an inefficient market of private companies. And it's a big market now, well-funded, plenty of access opportunities to diversify your portfolio, oftentimes into smaller companies or more growth-oriented or venture-oriented companies. It provides diversification and access to a market, and as a long-term perpetual investor, you can accept some illiquidity. The long-term portfolio can accept illiquidity. We should take advantage of that when the opportunity presents itself.
So just wrapping up this section, but one of the questions we had from you all was, are we thinking about this portfolio holistically? And that's just core to the way we invest. We're thinking about that 8.5% as a holistic return target. We've walked you through the different ways in which we believe we can get you there. But we're also looking at it from a risk management perspective. So we've invested a lot in technology so that we can look deep into your portfolio. We know every single holding in your portfolio, and we can bring that up, and we can make sure that in addition to the volatility, which we've already stated at the highest level, bottom up, are you overexposed to the Magnificent Seven? Are you underexposed to the Magnificent Seven? Those are the kinds of things that we're looking at. And again, we're taking that holistic perspective. We've spoken predominantly, though, about the endowment. There are other portfolios we mentioned, Leslie mentioned, and Sarah, if you want to share what we have and what we're thinking about.
Sure. Thank you. So as Catherine mentioned, I'm Sarah Westling. I'm a part of the team and truly honored to get to work with all of you. In my role with you, it is understanding what it is that you'd like to hear from us. We were able to see the results from the fund holder survey that you had and take that information and really make that available for you. So Leslie had mentioned too briefly, we met in her office. We talked through what we are communicating to you on the portfolios that we have. So really exciting, more to come for you with making sure those quarterly reports are there, but also having more frequent reports that come with your fund holder statements as well. So a lot that is in process and you'll start to see over the next months. This section is talking about the portfolio options. So another part of the approval with the board last week was making sure that we had portfolio options for you. So as you can see, hopefully on this slide, and if you can, I'll try and go through it. We have the long-term portfolio, so the endowment, what Alan and Catherine just talked to you about, how we're trying to get to that 8.5%. You also have a short-term pool that's available. So this is one that's really everything that's spent right away. We took the feedback, though, again, from the fund holder survey, and that you have the intermediate term is a new portfolio that'll be offered, and then also a socially responsible investment portfolio that will be offered. So just going through those briefly, we've talked about this one before, but thinking about how it's best suited for you. So this is where most of you are invested. This is where it is a grant distribution that you're doing around 5%. The one that you have with the short term didn't really allow for if you had a bunch of funds coming up in that sort of 3 to 7 year range. So thinking about, are you building a new building that has a longer term where you need that money? This intermediate pool that'll be an option will give you that flexibility. So it's a good balance that you have between preserving that capital as well as returning a bit of an investment return. the short term, again, this is one that you currently have. This is where it's significant funds that are being spent. The allocation in it is to fixed income, so this is not one that's going to return a lot. And so that's why this should be something that is a very immediate need. And then the last pool that we have that will be new for you is socially responsible. And so this will be for an investor that wants to have that double bottom line. You want a financial return as well as doing socially responsible. And looking a little bit more at what that means, we look at that as environment, governance, and a social return. So these are things like making sure that the environment is good, there's not a lot of pollution from a company. From a governance perspective, that there are good processes with companies that are invested. And with social, it can be tied to a number of different factors, but some that are listed here that it could include are alcohol and gambling. So this is just to show you a high level. There will be more information coming over the coming months, but we're really excited to be able to listen to the feedback from you and to be able to take action with that.
Okay, update on performance. I think that everybody cares. That's our number one job, is to deliver results. This is backward looking. This is what markets have done. It's tremendous. We've got a 3-year now period as we're dropping off 2022, which was horrible. We're dropping 22 off of a 3-year number now, and global equity markets are up 17% annualized now from August of 22 to 25. Again, don't expect that to be sustainable. We will go through a down cycle. We don't know exactly when, but we will stay invested. Bonds have generated a positive return. There isn't one line on that that's negative on a year-to-date, a 1-year, and a 3-year. This is a tremendous time to have money invested in markets. Our clients have participated. You've participated. You're going to participate even better going forward. But this has been the backdrop that we've had. So the numbers are going to look good on the portfolio performance. Of course, this is what the market's done. Our job, as you look at that chart and the data that Catherine showed you, is to do better than just what the market gives you, especially just what the public market gives you. And that's the goal as we move forward.
Okay, so that was the markets. This is your actual portfolio, and we're starting with the short-term portfolio performance. Sarah mentioned those typically don't have as high returns, definitely not over the long term, over the endowments or the longer term, the equity-driven portfolios, but this has been an incredible time to be invested in cash. It's a very safe place to be, and cash has been generating more than 4% returns. And you can see that from your performance and your returns right now. So year to date, 3.1%. 1 year, though, you're right at that 4.7%. 3 year, 4.7%. So it should remain a nice place to be for the next few years as the Fed cuts the interest rates, and they just did recently. This will start to come down, but we don't expect it to come down too quickly. So this should be a very attractive portfolio option for now. Then if you look at the results of your long-term portfolio, here you are seeing those double-digit returns, especially at that 1 year and 3 year level. So your 1 year, you return 12.4%. That is in excess of the benchmark of 11.6. And more importantly, that goal, that sustainable goal, it's roughly 8.5%. It will change depending on inflation from period to period, but that's over that 7.9%. So you are checking that box in terms of achieving that long-term sustainable rate, and you have for a long time. And understand and respectful to our predecessors on the investment side, but your 10-year return is 9%, and that sustainable rate during that time period is 8.1%. So you are not only achieving your sustainable rate, but you're growing, and that is our goal, to keep you there. Just high level, a couple of things that have really worked in your favor. A little bit longer term is you had a U.S. bias. That means you had a little more on the U.S. than you did on your international and non-U.S. investments. And that has worked very, very well for the past few years. Now you're about at market rate. That's one thing FEG did is, looked at that and made sure that the thesis still stood. And right now, it's expensive to invest, especially in the U.S. So stay invested in the U.S., but broaden that. So that's where we're at with that. Other things, Alan mentioned gold as being something that was opportunistic. You do have an overweight to gold in your position since we've started with you all. Since we've started, that has returned 45%. So that is a very small position, but it is overweight, and it's helping to contribute to your current positive returns. There was some volatility. You had some active managers that did very well at the end of the last year, and they didn't do as well at the beginning of this year. But which is why you take that longer-term perspective. Some good holdings that have contributed to that 12.4% one-year return. But one last thing we'll end on is we talk about comparing you to benchmarks. These benchmarks are pretty high marks. These are not easy benchmarks to beat. And that's deliberate. That's meant to try to make sure we're working really hard to get you these returns. But we do look at your peers. And we have a wealth of peer data just with our experience with community foundations. And this is looking as of June 30th. The other data was as of the end of August. But looking at your returns, so second quarter, that was the first quarter that we were fully your asset managers, you returned 7.7% over your peers in the same size bracket of 7.1%. So you are, to us, that's important to make sure that not only you're watching your peers, but you're understanding how your strategy might be different and how it might behave. And then for the one-year time period, you're also outperforming peers at 12% versus 11.5%. Wanted to end on a good note, but really, again, thank you. Hopefully this provided you with better context and better transparency into how we're thinking about managing the portfolio, but we're around after the event and would absolutely love to get to know you and address any questions you might have. So thanks.
We're ready to get up and stretch or, a little dance move. Thank you all. That was deep, dense, and really important. So thank you all for spending time with us here this morning. We want to create some space for questions. If any of you have questions that you'd like to ask of FEG or Jake or myself, we're happy to hear those now. We'll also be milling about after the session, and we're happy to hear those in a sort of one-on-one setting. So we'll bring out the microphones and see if anyone has any questions to ask. I want to make sure to wrap by saying thank you again for being here and your commitment to our collective success. And then ultimately, before you leave, we are going to have, will it be here, Jumana? We will have on this screen a QR code with a very brief survey. You will also be emailed that survey. That survey is evidence of our commitment to hear from you in as many ways as possible and make sure this event is responsive to your needs, is positioned in a way that suits your request for information, and is getting you informed and engaged in all of the things we're doing. So please take a couple of minutes. I ran through it myself in advance of this meeting, and I can promise you it will take less than 2 minutes, and the feedback will be really important for us. So thank you for that. And I will take a brief pause to see if any hands go up for questions. If so, we'll answer those, and if not, we'll convene. I do see a question. Thank you. Oh, 2 questions. All right, we are, if you will please stand. FEG, if you will please come up and join me. We are recording this for folks who are not able to attend the session. So speaking into the microphone is really important for the recording. So thank you.
Okay, thank you for the presentation. I guess now it works. There's a question for FE&G. How do you support, or how can you support the reporting and facilitate the reporting of CA, Charlottesville Area Community Foundation?
Yeah, so speaking to the reporting, we will have quarterly reports that you get that are very detailed, that will list the performance, looking at a lot of the underlying factors that were mentioned today, talking about the weighting, where we're overweight, where we're underweight. And then on a monthly basis, we will have a short one-page report that will cover high-level market commentary, what happened that month. And then it will go into detail on the portfolio positioning. So how is the portfolio positioned? And then lastly, it'll have performance on there as well. So we'll have that on a monthly basis for you.
I might just add one thing. You know, we are constantly reinvesting in technology, and as technology provides better, quicker options, we will be sure to roll those out.
Hi there, Alex with Charlottesville Scholarship Program. Really appreciated the presentation. It was really fantastic, and I enjoyed it very much. So I'm not sure if this is an FEG or CACF question. For the intermediate pool, we've typically been some funds in long-term pool, some funds in basically the money market pool. Will the option be there to say, okay, we want some of our funds to now be in the intermediate while maintaining some in the long-term? Will that be an option available?
Yes, our hope is that we're just creating more dynamism and variability in the options, so we will roll those out in the beginning of next year, where you'll have the option to elect that intermediate and or the socially responsible pool. So there won't be forced participation, but it will be an opportunity or an option. Yeah, of course. Any other questions? All right, I see a bunch of folks that are ready to maybe get on with their days. Thank you so much for being here this morning. This is my first big public event since arriving, and I have to say the generosity of your body language and faces and the conversations we've had have inspired me, and I feel even more excited than I did when I got here. So thank you.